Assalamualaikum warahmatullahi wabarakatuh and salam sejahtera. The purpose of having this meeting today is to discuss for the business accounting project that is Hazimi. We're going to discuss for the part A, which is contains with three questions. The question is based on the above uninfrastructure balance as of 31 December 2023. Prepare the following using Microsoft Excel. A. Statement of profit or loss and other comprehensive income. B. Statement in changes in non-equity. And C. Statement of financial position for mass media enterprise. So we move to the question A, which is statement of profit or loss and other comprehensive income. The title is Mass Media Enterprise, Statement of Profit or Loss and Other Comprehensive Income. So the first one, sales amount is 1004,928. Sales return and allowance amount is 3525. For the sales discount, the amount is 7928. To get the net sale amount, we take the sales total, which is 1004,928 minus with the sales return and allowance, which is 3525, and the sales discount, which is 7928, and we get the net sales amount, which is 993,475. For the cost of merchandise sold, the amount is 478,940. 478,940. To get the gross profit amount, we take the net sales amount, which is 993,475, minus with the cost of merchandise sold, which is 478,974. So the gross profit amount is 514,535. Okay, we move to the operating expenses. All the expenses are included as stated in the unadjusted trial balance information. So the first expenses is advertising expenses. The amount is 20200. The depreciation expense for the office equipment amount is 57750. Next, depreciation expense for the delivery van, the amount is 37888. For the delivery van request and maintenance expenses, the amount is 8575. Amount for the sales salary expense, the amount is 85670. 85670. For the sales supply expenses, the amount is 8560. Haikal, can you continue for the other expenses?
The other expenses is insurance expenses. The amount is 15600. The office service expenses is 25550. And the office supply expenses is 5680. The rental expenses is 30500. The utility expenses is 25870. So the total expenses is 331843. To get the operating outfit, we have to gross profit minus to the total operating expenses. So 514535 minus to 331843 equal to 182,692. The interest expenses is 23123. To get the net income, operating outfit minus to interest expenses, 182,692 minus to 23123 equal to 159569. So the other comprehensive income is 0. So the total comprehensive income is 159569.
Okay, thank you, Haikal. That is for the statement of profit or loss and other comprehensive income for the month ended December 31st, 2023. Okay, so we move to the question B, which is statement of changes in owner equity for the month ended December 31st, 2023. Anybody would like to continue?
Okay, thank you, Haikal and Amirul. Next, we move on to statement of changes in owner's equity for the month ended 31st December 2023. We started with 0 ringgit capital on 1st November 2023. Investment on 1st November 2023 is 680,000 plus the net income for November and December 159,569 and equal to 839,569 less the withdrawals 23,500. So the increase in owner's equity equal to 8,160,69 and the total of capital on 31st December 2023 is 816,069.
Okay, thank you, Hanis, for the explanation for the statement of changes in annual equity. Now we move to the last question, which is statement of financial position. Anybody would like to continue?
Okay, so now we move to statement of financial position. For the first item is current asset. So the first one, cash. The amount is 567,000. The second one, account receivable, 145,875. The next one, merchandise inventory. The amount is 392,813. So the next one, sales supplies. The amount is 6875. Then office supplies, 4000. The last one, prepaid insurance, 72975. The total of current asset is 1189538. Okay, so the next one, non-current asset. First item is long-term investment. The amount is 193,978. Okay. The next one, office equipment. The amount is 273.
Sorry, Haikal, I think you need to put the amount for the long-term investment. It is below the block. Again, how much?
193,978. Okay. So the next one, office equipment. The amount is 273,750. Then we need to minus accumulated depreciation, and the amount is 173,250. The total for office equipment is 100,500. Okay, the next one, delivery van. The amount is 378,875. So we minus with accumulated depreciation, 227,325. And the amount for delivery van is 151,550. Total non-current asset is 446,028. For the total asset, we need to plus total current asset with non-current asset, and the amount is 1635566.
Okay, so next is liabilities. The amount for account payable is 309,275. Okay, for next salaries payable, the amount is 25,000. Okay, for interest payable, the amount is 28,125. So the amount for unearned revenue, the amount is 42,009. Also for the total current liabilities is 404409. So next for long-term liabilities, the amount for notes payable is 415,088. Yeah, so the total liabilities is 819497, which is total current liabilities plus with total liabilities. The next is owner equity. For temporary Ramli capital, the amount is 816069.
Okay, guys, that's the answer for the part A. We're going to continue our discussion for the part B and part C. The question for the part B is, the information erroneously omitted surface after completing the financial statement in part A, which requires the passing of adjusting others. Explain the impact of the omission, OS overstated, US understated, CS correctly stated, other reference on the element of the accounting equation of Masmira in the past, especially the net income. So the question is, A, depreciation of office equipment and delivery van for the sum of RM 35000. Anybody would like to give the answer?
I would like to answer the A question. For the net income, I think is understated, US. For the expenses, I think it should be overstated. And the asset, I think it should be overstated again. And the liability, correctly stated, does not change.
Okay, thank you, Haikal. For the question B, unpaid salaries RM 20,000. Anybody would like to give the answer?
Okay, so for question B, net income is understated, expense overstated, asset currently stated, and liability understated.
Okay, there is an answer for the B.
The available
For C, the available balance of office supplies in hand was RM 300. Anybody would like to give the answer?
I have an answer for C. For net income, it's understated. Expenses overstated. Assets overstated, and liability correctly stated.
Okay, thank you, Hanis. For D, a total of RM 7,800 as the unearned revenue was realized. Anybody would like to give the answer?
Me, I think the answer for net income is understated, and expense is correctly stated. Same with asset. Asset also is correctly stated, and the next liability is overstated. Is that right, Afina? Okay.
Okay.
Okay, for E, a sum of RM 40500 insurance has already expired. Can anyone give the answer?
I will give the answer. For the net income, I think understated, and the expenses, I think overstated, and the asset should be overstated again, and the liability correctly stated.
Okay, thank you, Haikal. For F, the billing department forgot to send invoices to a customer for a total sum of RM 24400. Anyone have the answer?
I have the answer. So the net income is understated. And expense, I think, correctly stated. For asset, the answer is understated. And the liability is correctly stated.
Okay, thank you,
For
Afina.
G,
For G, interest revenue RM 15800 was not recorded. Anyone have the answer?
Okay, for G, the net income is understated. Expenses correctly stated.
Can you say again?
Okay, for the net income, it's understated. Expenses correctly stated. Assets understated. And liability correctly stated.
Okay, thank you, Hanis.
For the
For the last question for the part B, price invoices amounting to RM 135,000 were misplaced and only recently discovered. Maybe can you give the answer?
Yes, I think the answer for net income is understated. For expenses is overstated. Asset is correctly stated. Yeah, and for liability is understated.
Okay, thank you. That is the last question for the part B. Now we go into for the last part, which is part C. The question is, discuss the following situations from accounting and business perspective. With the rapid expansion of mass media enterprise, Santari is contemplating the idea of opening more outlets at strategic location in the city. However, opening more branches requires Santari to adopt new strategies to support the increased sales revenue, credit management, and improve account receivable collection and inventory management. An approach under consideration is to reevaluate the credit terms and the shipping strategy will significantly impact the accounts receivable, collection, and inventory management structure. Based on the above situation, discuss and advise answering on the following. First question, the appropriate credit term to improve increased sales or revenue, credit management, improve accounts and receivable collection, and inventory management. I'm going to read the answer for the question. The first answer is shorter credit period. The first strategy that should be applied is factoring in the short credit period. A company can reduce the average of 60 days and provide 30 or fewer days for the company reason which tries to settle the credit more quickly in the customer hands to improve cash flow by lessening any probable bad debt probability. By suggesting such a plan, cash collection of accounts receivable would still be healthy even if the business enters into full-scale expansion. That is the first answer for the question 1. Anybody have other answer for question 1?
I think the other answer rather than shorter credit period, I think is early payment discount. The entire company can extend some form of early payment discount such as to 10 and 30. Under this scheme, the customer will get to enjoy 2% discount on the total bill if they pay within 10 days. It would encourage customer to pay on time as it reduces the outstanding receivable and hence will not affect the loyalty and trust of the customer. Okay.
Okay, thank you, Haikal. That is the answer for appropriate credit terms for the question 1. So question 2 for the part C, the appropriate shipping term to improve sales or revenues, credit management, appropriate accounts receivable collection, and inventory management. Everybody has the answer for this. Everybody would like to start the answer.
FOB shipping terms. The FOB shipping terms will help inventory in maintaining its inventories. According to FOB shipping point, the revenue can be considered as earned at the time of shipping. So all the risk and cost of shipment would go to the customers. This would ensure a higher inventory turnover and reduce on-hand goods on the balance sheet. Contrarily, FOB destination shift the risk to inventory until such time as the goods arrive with the customers, thereby enhancing consumer satisfaction and loyalty. The choice of the correct FOB terms will be selected based on customers' expectation or operational goals.
Okay, thank you, Afina. Anybody has the answer for appropriate shipping terms for the question 2 for part C?
Okay, I guess Tantari should also apply just in time to get the appropriate shipping for appropriate shipping terms. Yeah, it has also got to have scope for introducing just in time policy of inventory management. This would ensure the shipment schedule matches the demands of the day and thereby ensures that new outlet excessive inventories or storage costs are totally prevented in line with requirements in appropriate timings. In that manner, shipment with respective maintenance for optimal inventories lets Tantari progress with optimized operational efficiency together with waste elimination leading to continuous development.
Okay, thank you, Hanis. So I guess that is all the answer for the part C. Thank you for joining this discussion. So you guys may leave.